Everybody has their own different key levels and everybody thinks they're magic, but mine are better. Okay? Nah, just kidding. But well, actually they are. And let me make a case for it, right? Give me just 1 second. So, high frequency trading firms, market makers, option sellers and dealers, they make up between 60 and 80% of all the volume on NQ. That's a lot of freaking volume, right? So, there's ways to see the levels where they're going to be trading from or where we can expect reaction from. Now, there's going to be tons of levels and you got to be able to discern. That's why we wait for liquidity on the book map and whatnot. But I'm just going to break down some trades that I sent to the group this week. Some wonderful trades, amazing take profit, so beautiful. If you want to learn more about Gamma and more about these levels, just click below. I have a free training. Just click there, get access to the training. But let's talk about this first trade, right? 9:28 a.m. 2 minutes before the market open, I sent this. I want to for a high liquidity level or event before taking a position. Turns out that the HVL 0 DT, right, again, the HVL is a level we want to see rejections from. We got some liquidity that built up, and look where price rejected at a gamma level with liquidity. Now, the most important thing is we had positive exposure. What does positive exposure means? As price goes up, sellers are going to get in, right, and they're going to try to sell it off, right? The dealers, they need to hedge a one-to-one. And as price goes down, they're going to buy. But they're going to buy at areas of liquidity. Therefore, and they're going to sell at areas of liquidity. That makes sense. Therefore, this is a great level to sell from. After we have a quick run into the HVL and reverse, and there's no liquidity at the GEX2 or at this HVL, right? Again, unless there's liquidity, we don't care about these levels, but there was, okay? There was liquidity. Therefore, we care about the HVL 0 DT. We see that, and then the put support is a level for buying, and we did have some liquidity here, which is why I exited early here and not at the SPX GEX5. So, I took my trade down into here, I alerted the Discord, and we ended up catching, again, I was risking, what was it? Let's call it 10 points, 14 points, right? Again, risking 14 points to get almost 60. Pretty good trade, pretty good risk reward. Super solid trade, right? And then again, after we tapped the HVL, we had some iceberg orders coming on book map. And again, we entered before the SPX, the GEX2 was broken just because we did not have any orders or any liquidity at the GEX2. Again, guys, if these levels confuse you, click below. You got the free training. I got you. Then let's go down into the second trade I alerted. Again, on the Discord, I sent it this week. I want to move down into the GEX2 or into the HVL and then a rejection higher. We went into the GEX2, we went close to here, and then we had a lot of buy orders come in around this area at bookmap. Not only that, but we broke the liquidity HVL and quickly reclaimed it. What does this tell me? This tells me that the buyers are absolutely taken over, and we had over 170 iceberg orders come in between this spot and this spot over here in a span of 2 minutes. That is a lot of freaking iceberg orders, right? Not only that, but we are in a positive exposure environment, right? So as we go down, we want to see the buyers come in, put in their orders to send price higher. And then we had this HVL here with liquidity. Emilio, why did you not target the GEX3 SPX or the GEX5 SPX or another level? Because the HVL was the only one that had sell orders at this area. It actually had liquidity, and they're going to look to fill their orders at this next spot, right? So that was why I took that trade. And again, yes, I have the book map. Yes, I have the different things. But honestly, all you need to do is understand these levels, the context and the story around each level, and you're pretty much good to go, right? It's just about the actual implementation. So again, this is a very short video on these levels. And actually, it's honestly not as complicated as many would think. You just need to understand how dealing works, how exposure works, and whatnot. Now that we're in this video, actually, why don't we get into the next one, which is kind of how these levels actually work, and just understanding the different levels before you go into the free training. These are the different GEX levels and how you can use them, right? Again, this is just a quick explanation I was doing for one of my students, but this is how they work, right? The call resistance is a level where we want to sell from, right? So if price comes from below, we want to see it reject, or we want to see iceberg orders come in and go lower, right? We want the volume bars below to show bearishness and icebergs. Now, the next level that we want to look for is the put support. Again, this put support level, essentially we want to buy from it. So let's say the price is above the put support, right? We want to see price come into the put support, reject, and go higher. The gamma wall, it is a very interesting level to trade. I'll tell you guys exactly why. Assume this is a gamma wall. Price will usually get pinned to the gamma wall, meaning if it goes higher, it will consolidate, go lower. Come back, consolidate, go higher. It all depends on liquidity, right? If there's no liquidity at these areas, so if there's no liquidity at these areas, we just want to make sure that we don't take trades. But if the gamma wall does have liquidity, it is going to be a level that has a lot of activity. So again, if you're far from the gamma wall, you want to trade into it. If you're at the gamma wall, you want to trade away from it, depending on the reaction that we get at said level. The HVL, we want to see reversal. So if this is the HVL, again, pretty textbook trade over here. but we drop down into this HVL, right? It's covered in green, but we drop down. Boom, we take a trade out of that HVL area. Same thing over here, right? We come into the HVL, it had liquidity. Therefore, we want to take a trade away from the HVL. Pretty straightforward setup. 1 day max, you want to sell from it. If price is above the 1 day max, it's probably going to get very aggressive to the upside because there's no more hedging. 1 day min, you want to buy from it. If price gets below the 1 day min, you want to see aggressiveness down and just catch and move into liquidity. And then the GEX levels, right? We have tons of GEX levels. You can see over here, 5, 2, 1, whatever. From 1 to 9, 1 is the strongest, 9 is the weakest. And it depends on the exposure, right? If we have positive gamma exposure, that means that as price goes up, sellers come in. We want to use the GEX levels for the reversals. And if we come into a GEX level lower, that means that the buyers are stepping in. And once we see our confirmations, we want to trade away from it with a buy. If we have negative conditions, right, let's say this is the XPX level. As soon as price gets here, we want to see some sort of buyer confirmation and trade higher, giving that dealers are feeding into the moves. And if we go lower into the GEX level, we just want to sell off from it and go lower. So that's just the basic explanation of it. Again, guys, down below, free training. I hope you enjoyed this quick video. I was just talking with a mentee and wanted to share it with you guys as well because I think this is very valuable information. I know the videos are quick, so ask your questions in the comments. Bye-bye.